Hey traders, Jonathan here at ForexSchoolOnline.com. I've just noticed a setup in the US dollar Japanese yen 4-hour time frame, and I've set my orders and I'm looking to go short when price breaks low off the pin bar. I've posted this setup in the members only forum for the members watching this one, so I hope you're able to jump aboard or at least watch this and learn something about how these pin bars can be played and how they can be managed. The pin bar I am talking about is this lovely and obvious large pin bar reversal right here. It sticks out from away from everything. There is space in between, and it's not formed. You'll see a lot of these pin bars form, say like this in here. Where's another one? This sort of in here. They're not formed away from everything. They don't stand out. You'll notice the difference of this pin bar. It stands out away from the rest of the price. It's just there. It's rejecting a level, and it's shouting at us, okay, short me, I want to go lower. Okay, so there's a few reasons why I'm into this trade. The first one, if we look left to right of the screen, we'll notice the price on the 4-hour chart is trending lower. Okay, price is going lower, and of course we're always trying to get in with the overall trend, and more importantly, the medium to short term trend. We are swing traders at Forex Online. We are looking to trade anywhere from 5 to 10 periods. We're not trying to trade massive chunks from here to here. We're trying to trade the swing. So we're more trying to trade this little swing in here, or this little swing up and then take a profit, get out. Okay, so trade this swing lower and take a profit, get out. We're not looking for the massive swing, so the short term to medium trend is more what we need, more what we're after. I know I do see some people zoom their charts out, and this would then confuse them because they'd be wondering what's the go with all this up and then down. What do they do now? Is this now a range market? Is this now an uptrend with just a 50% or 61% retrace? Well, it doesn't matter. As I just said, if you're looking to trade really large chunks of the market, which can be done, so if you're looking to trade, say, periods of this length, say a couple of months or a couple of weeks at a time, you would be worried what's happening over a longer period of time. But at Forex School Online, we're looking to trade small swings in the market. We don't need to know. Not that we don't need to know. We don't need to be as concerned what's happening on a longer time frame compared to the most recent swings. We've got to get in with the recent swings, which we're doing here. Okay, so price left to right of the chart is going down. We then need to identify a key level in the market, and we've done that here. We've noticed the price came down and it hit support. It bounced from this support, and it faked out at this level. Once again, it was looking like closing, going lower, but once again it found buyers and it found support through here again. Price stayed above and went lower just here. It didn't quite touch it, but went higher again. And this candle, now most people wouldn't even look at this candle, they just write it off and not even bother, but we can learn a lot from these next three candles. The bottom of this candle tested these lows and rejected and went higher. Okay, so that's telling us that this level was still being held and still being respected. The next candle then, its candle wick went lower and went under this level, but once again it closed above this level, was still being respected. Once again on the next candle, price tested but closed above this level, so this level was still holding. We've learnt that from these three candles. Once price, however, had closed, we notice a close beyond this level. Well, the moves to the bear side was definitely on. The bears were in control from there. That was the vital point here. Once the bears had closed below, they were off to the races. We always do at some stage after that, though, is that if price was to retrace back to this level, this old support level would look to hold as our new resistance. And this is what we've got now with this pin bar reversal. So I'll zoom back into the chart. We'll see we've got this pin bar reversal that's at this same level as this previous swing support level. So I'm not entered in this trade yet. I have set my orders. I'm taking a break at the low, and I'll look to target these recent lows and then hopefully a runner, because this is with the trend. I'll leave this first half of the video there, and I'll come back in a few days' time and I'll recap just how I took profit on this one and how I played it. I'm pretty confident. It's one of my favourite setups on a major pair. It is on the US dollar Japanese yen, and I'll talk about the recapping of the trade the next part of the video. Hey traders, Jonathan back again with the second part of this video. You'll notice this pin bar that we discussed in the first half. I was entered not long after doing the video. I was entered into this setup. I did have my order set to short at the break, which after I turned the video off, happened pretty swiftly. Price then at these recent lows found support and did bounce. Now, I was getting a lot of emails at this time and a lot of comments about people stressing about these highs here. With pin bars, we normally do have the stop above the high, and people were getting quite anxious because these stops were getting close to being taken out. The thing is, we never know which trades are going to be the winners, and we can never know for sure if a trade is going to win. It doesn't matter how good it looks. The trade always has the potential to lose. And that's why we harp on and we're so strong about the correct money management and never risking too much on any one trade. Once again, it doesn't matter how good a setup looks, it can lose. The second important thing we need to take out of this is you need to let the market do its thing. You need to let the market take you out. If price has gone up this high, there's no point cancelling your trade now. You might as well just let the market do its thing. Don't get all wrapped up in panic. Just let it do its thing. And the chances are, if it's found resistance once, it's most likely going to find resistance again and sell off. Okay, if you're playing from solid areas like these videos cover, the chances are, if it's found support and resistance, it's going to do it again. So let your trade have time to move. You've got your stop there for a reason. Okay, that's your maximum risk. Sure, it's good when you can see the market turning against you to cut your risk. But in trades like this, when there's say another 20 pips, you're better off just letting the market do its thing. You're in the trade for a reason. My original plan here was we were trading into a big round number of 80.00. I'll put the horizontal line through there just to highlight that. Now, my original plan was once price had actually reached this, I was going to move to break even. However, price, as you can see, didn't quite test these, and I was left with their full trade once these highs to go up. So I was still in this trade. There was then that I was starting to post-appeal, just either be stopped out or let the market do its thing. It was non-farm payroll week. We were trading in a non-farm payroll. You'll see this really large and erratic candle here. This was the non-farm payroll announcement through here. However, once again, price did go lower. My targets, as I said in the first part of this video, were at these recent lows. I was actually taken out during the non-farm payroll spike. We had a spike lower. A majority of my profit was taken out. I'm left with one small position now. Depending how it opens on Monday, I'll look to lock in more profits. I am at break even on the last position of the trade. Depending on how the market opens, I will look to lock in more profit. Either way, it's been a winning trade. It's been a solid trade. Just to quickly recap why this trade was such a handy trade, and why it's one of my personal favourite setups. If we zoom out the chart, we'll notice that we have from left to right, we're trading with the overall momentum. Okay, we've got the short term and the medium term trend on our favour. All these pullbacks are terminating and going back lower. And all we were looking to do here was we had this old support region. Price had found support in the past, and as I covered in the first part, we knew if this area could get tested again, the chances are it would find sellers, and this old support would hold as new resistance and we'd sell off, and that's exactly what happened. So a very simple trade. These sort of trades that you can pick with the overall trend at logical pullbacks in the market, they're quite common, and they're quite high probability setups when you know how to manage them correctly. Now, I'm not going to go over how I manage it and how I cut my risk for non-farm payroll in particular. Do leave that over in the members section. However, if beginners can start to look for this setup, they can do a lot worse than trying to pick tops and bottoms. Okay, picking retraces throughout a trend is a high probability setup and something that's one of my favourite setups. I hope you've learned something during this video. If you want to learn anything more about price action, jump on over to forexschoolonline.com. We have plenty of free videos, free articles. If you've got any questions or want to contact me, just jump on over and hit the contact link. Send me an email, and I normally get back to people within 12 to 24 hours, just depending on the workload at that point in time, but no longer than 24 hours normally. I hope you've enjoyed this video. Safe trading to you, and I'll look forward to seeing you in the next video.